Tell me, how was the quarter? How's the first half of the year shaping up? What's the top line?
The quarter's been great. Our EBITDA is up by almost 3%. Net income up by a little over 4%. And the free cash flow generation has been up by over 20% year on year.
Now, part of this journey, part of this story is about taking efficiencies and creating efficiencies in the business. Is that one of the biggest drivers of this set of numbers, or is there something more to it?
No, there's definitely a lot more to it. So it's not just about the cost efficiencies, which have definitely helped us deliver the bottom line numbers, but it's also about expansion, which is gaining market share, and it's also about improving our C stores. So our convenience store revitalization program is providing a better customer experience overall, and that's starting to show some real results.
Now, the thing that most of the people in the market are going to want to know, John Kerry is gone. So to that end, do I expect continuity from you? Do I expect a structural change from you? What is your vision for the way forward?
So John Kerry is not gone. John is still part of the company. He's our advisor. So he's still around. He's crafted a good strategy that put the company on an upwards trajectory in terms of growth. Our job, our mandate is to deliver. My job is to execute on that strategy going forward.
Expansion is going to be a critical part of that. And so I suppose to that end, what is there new that you can tell me in regards to that, whether it's in Saudi or whether it's here in the UAE? What's going to be the core focus for you?
So the expansion indeed is a huge part of it. So in our home market in UAE, we will continue expansion. At the end of Q3, I'll be able to tell you some more solid numbers. But what we promised our shareholders in Capital Markets Day, both in London and in New York, we will continue to expand 25 to 30 stores by the end of 2019. We're on track to deliver that.
Would you buy another business? I mean, perhaps the quickest way to expansion is acquisition.
Yes, that's one of the ways. But again, as we promised our shareholders during the IPO, as we continue to promise them, we will be smart, we will be disciplined in terms of delivering that growth. So it's not just acquisitions for the sake of headlines.
Okay, so
where we can add value, as John has mentioned to you on the show before, is when we decide to, when and where we grow.
Well, you're the man in the driving seat now, so I am duty bound to sort of say then, are you more of a buyer of businesses than you are of an organic growth? What's your business model in your head that leans for you?
Either way, either way.
You're fully hedged.
Where we intend to grow is we will deliver international expansion. So we've got a couple of sites in Saudi on the ground. We're taking good notes. We're setting that market. When the time is right, where we can add value to that market, do a better job, is when we'll decide organic or inorganic.
Do you think the margins are more appealing inside than they are here in terms of looking at the expansion story?
The margins are great here, not as attractive next door. So we really need to up our game there in terms of what else we can add to the business, and that's the non-fuel retail. That's what we're perfecting here.
Well, that's what I was looking at. I was looking at the average basket size just in some of the notes. I mean, that's up as well. The uplift in the average basket size up nearly 7. I'm rounding. I'm giving you an extra 0.2 of 1%. Remember that.
Okay.
It's nearly 7% for the first half.
Yeah.
I mean, are we confident? Are we shopping? Are we doing more shopping as we stop off to buy the gas?
Absolutely. So it's gone up from 6.6 to 7.3. That's a huge jump. That means our revitalization program, the premium service that we've been offering across the UAE, that offers our customers redemption, encourages them to get out of the car, go in the store, redeem, but also increases the footfall in the store. So that's starting to pay off. 40% plus revenues year on year from C stores, from our convenience stores.
So that sort of sets out the margin story. And that when we talk about expansion, we have a very visual concept of who you are, but there's also a lubricants business as well.
Absolutely.
And I want to get a little bit more on that in terms of the ambitions in India, if there's any more thinking on that. Or please don't tell me I've got to wait till the end of the third quarter for this news line. So what about the ambitions?
So we can add a bit of color. Yes, we know. There's something we're working on, trying to make inroads into India as well. Lubes business is exciting. Corporate volumes overall have gone up. That's starting to show some green shoots in the economy. So that's a really, really good sign. Once again, when we're ready to actually make a move and acquire that shelf space, we'll do so.